Simplicity is the glory of expression. Walt Whitman. I love that quote. That is the glory of what we do, is keeping everything as simple as possible in our charting, but not simpler. Why? Because it works. You guys who are with us every day, as we tell you to be, 10 to 15 minutes is all we ask. You are learning day after day how simplicity works. The beauty of the weekly market crossover, the beauty of the price percent oscillator, the derivative oscillator working in conjunction, the Heikin-Ashi candlesticks, the Bollinger Bands, our trend lines, all the things that we do, we keep it as simple as possible, but not simpler. And it is a glory of expression to simplify things down to what works, what is basic, what allows you to make decisions and not get stuck in analysis paralysis, which far too many people who would like to be successful traders and investors, they just can't do it. They can't make decisions because they have made things so complicated. We don't do that. Let's jump into these markets. What do we see going on? We see the S&P 500, NASDAQ 100 up some for the day, gold and bonds down, and it gets really interesting as we hone in here and see just where things have gone and where they might be going. Now, first glance, we see that as far as the price percent oscillator goes, still negative, derivative oscillator gaining downward momentum. We look at the Heikin-Ashi candlesticks and we see a green open box spinning top, which means it's got some up movement. That's why it's a green open box candle, but it's little. And it's got wicks on the top and bottom, which means indecision. Trying to move up, but very, very much caught within the prior green and red boxes. That's all it's done for the week. Just a little bit of movement in there. So lots of indecision, tending up, but our price percent oscillator still negative, derivative oscillator gaining downward momentum. And remember, what the Heikin-Ashi candlesticks do not tell us what to do. What tells us what to do is all the charts all the time, but in particular, our main indicator, the price percent oscillator. We go to the 2-day chart. It's still negative also. And again, what we had happen on the prior 2-day candle was a green spinning top, indecision tending up, and we saw the following candle that just finished drawing, the latest 2-day candle finished drawing at the close of the market on Wednesday. Green open box candle pushing through the 2-day trend line. But again, price percent oscillator heading up toward the signal line, still negative. Derivative oscillator still negative. Now, this is where it gets interesting. As we drill into the 4-hour chart, what do we see? Well, we see where things hit a high of 293 back on the 4-hour chart for Monday afternoon. And then we go to what happened throughout the course of the day, not reaching quite as high as the 293.08 back on Monday afternoon. And what we see happening is, again, things had popped up throughout the course of the day to a high of 292.79. What's happening here as we look at this, we can see where things back on the 13th of August also popped up to that 293 level. And we see the same thing all the way back on the 8th of August. So we've got a little bit of a resistance, possibly. Are things going to go above that, pop through it, and keep going up? Or is that going to be a ceiling on where the S&P goes? If we start seeing things rotate down strong, hard, we might test the bottom again somewhere around the 282 level, or maybe even lower, maybe down to somewhere around the 2 Well, the low was 282.39, so somewhere around there. So yeah, we may see that happen again. So what I want you to do over the course on Thursday is pay close attention to if things do bounce off, if there is some magic line here at about the 283 mark or so, and things move over on the S&P and start shooting down. You start seeing the price percent oscillator rotate over. If the market opens up down tomorrow and stays that way, you might actually have a ceiling. Things might be bouncing back down again. Remember, the overall mood is down, so keep your eye on that. If it breaks through and shoots up, maybe it's going to try going back up again substantially, but we don't know. That's why we're going to watch throughout the course of the day on Thursday. Check it out in the morning. Check it out again in the afternoon. Going back to the weekly chart, same kind of setup on the Qs. What we see here as far as the week goes is again green open box candle, not as much indecision, a little more up, but again all of it contained in the prior green and red candles. Price percent oscillator still negative, derivative oscillator gaining downward momentum. 2-day chart still negative also, although you have two green up candles. The latest one's a pretty strong one up, again up 0.89% for the day. That's on the latest 2-day, but again not reaching higher, closing higher than we saw on the red down candle all the way back on Wednesday the 7th. So keep your eye on things. Derivative oscillator still negative, like we said, price percent oscillator. So the pressure is still negative on the market. Now, when we look at the 4-hour chart, we again see things topping out around the 189 point. And actually, we blew through the 200 period moving average line. We were attuned to that as we crossed through the 2-day on the 4-hour chart, the 2-day trend line, and this 200 period. That didn't slow things down, but is it going to slow down at the 50 period moving average line? I don't know. Might do that. Might slow down around the 189 mark. If it does, things start to roll over. Derivative oscillator's about where it was. Price percent oscillator still heading up. But again, keep your eye on things. Are we going to have a ceiling here and things start moving down and maybe drop down as far as 180? Would you like to make, I don't know, $6 or $7 on a down move? Yeah, that would be a nice little percentage gain in something like PSQ. So again, keep all of that in mind for a practice trade. Let's see what happens throughout the course of the day. Things may blow out and start heading up. Then we might see things climb, back up as high as they were. But remember, 2-day and the weekly are still confirmed down. So keep your eyes on the prize. Let the charts lead you. Don't start going out there gambling. We don't gamble in our practice trades. We act intelligently based upon what the charts are telling us. And let me tell you, my friends, y'all have seen the gains that we have had with this latest weekly vertical crossover. They've been quite beautiful. Let's continue to bank on it. Now, we go to bonds. Bonds down for the day, 0.67%, of course, after the up day yesterday. What do we see when we look at the candlesticks? Well, the candle is a red open box. Again, that's a cautionary candle, trying to push above the 2-day trend line, still above the weekly trend line. Price percent oscillator gaining, continuing to move up. Derivative oscillator gaining upward momentum. Go from the weekly to the 2-day. And again, we see a sideways slide in effect there, topping out maybe somewhere around the 145 mark. That's sort of where things have been sliding sideways at this point. Derivative oscillator losing momentum, but that price percent oscillator flatter, but still heading up, and of course still positive. Now let's look at the 4-hour chart. What do we see going on there? Well, we see a sideways slide, and remember, 2-day chart still confirmed up, weekly chart still confirmed up. This is the reverse of what's going on stocks that still have the downward pressure. TLT and gold still have upward pressure and have been sliding sideways. What are they waiting for? Are they somewhere around a floor at about the 144 mark? Well, as far as 20-year bonds goes, is that going to be a floor, and are things going to take off again? I don't know. Might. We're going to continue to watch and see what there is to see. The only way we could play this is if there's a 4-hour crossover going up, since the 2-day and the weekly are already confirmed up moves. So keep your eye on the price. Might have an opportunity over the rest of this week to jump into an up move. Might not. Charts are going to tell us. But again, all things being equal, the market tends to move in the direction of the largest charts. And for bonds and gold, it's up. For stocks, it's down. Keep that in mind. Watch the markets tomorrow. Lastly, go back to our weekly chart. Between the Qs and gold, I love them both. They are my two favorites. And what do we see going on with gold? Again, a red open box candle, cautionary, not pushing through, actually below that 2-day trend line, above the weekly. We see that the price percent oscillator still heading up, derivative oscillator losing momentum. Go to the 2-day chart. And again, that 2-day chart, we have two red dojis, indecision tending down. That last doji crossed through the last 2-day. That was the one representing Friday and Monday. We afterwards blew through the 2-day trend line, still well above the weekly. But we see the price percent oscillator is positive, but heading down, derivative oscillator losing downward momentum. What's gold going to do? Look at that 4-hour chart, and we just see a sideways slide and a green doji to end the day. Indecision tending up. Now the price percent oscillator, however, is still hammering down, not hammering down, heading down. Derivative oscillators losing downward momentum. See, it peaked out all the way back. And again, it's an oscillator. So it was gaining all that momentum. That momentum that drove it down ended. The downward momentum ended in the afternoon on Tuesday the 20th. And now it's starting to move back up again momentum-wise on the derivative oscillator. So let's see if that's going to be enough for us to have a floor somewhere around the 141 mark, something like that. And if things are going to accelerate back up again. Because again, bonds and gold are primed to move up. Stocks, that's the S&P and the Qs, are primed to move down. So let's see if we have any of those 4-hour crossovers that could get us into a practice trade. We're going to continue to watch for that. That's where we are, folks, as we end the day. I spent a large part of my afternoon after spending a lot of time putting together the slideshow, the keynote portion of Options Made Simple, the Charting Wealth Way. I then recorded it. I think I recorded it about 3 or 4 times just to get it right. It is, I think, a wonderful teaching. Going to be releasing it here in the next few days. If you want to receive it, you need to be a subscriber, because I'm not just going to publish it right out on the web anytime soon. If you want to subscribe, go to chartingwealth.com and sign up. It's free. And go there. Put in your name, email address, subscribe. You'll get the daily market review every day, once a week. You'll get the weekly market review and forecast, and you'll get our daily special trainings that we put out. We have a special one that we're putting out for you today about Fickle Mistress. That's what it's entitled. It's about the market and understanding how she works. And she is a fickle mistress, but she can be a very good one to you if you know how to deal with her. Folks, that's where we are at the end of the day. If you hadn't purchased our book, 12th Printing, available, your autographed copy is sitting right here in the Charting Wealth World Headquarters office, ready to go out. If you will just go buy it, look for a link in the show notes. If you live overseas, email us, cw@chartingwealth.com. For some reason, Square won't clear you, so just email us. We'll send you a PayPal invoice. Pay that. We'll send you a book wherever you are in the world. And don't forget, Accelerated Market Mastery coming to you very, very soon. It's going to be a 3-month intensive training course. Starts off with technical analysis, everything you need to know to become a charting master. Not 5 or 10 years. We're going to give it to you in 3 months, along with becoming an options master. That's month number 2. And of course, month number 3, pulling it all together, learning how to create your own personal wealth fund. The nice thing about options is if you're not stepping into this game with several $100,000 in, say, a self-directed IRA, or self-directed rather, 401k, something like that, or just a big savings account once you get good at being able to chart the market and that's something you want to trade. You might be a little bit more humbler in your means. Well, you can start with a few dollars in an options trading account and build that up into quite a sum when you become someone who can actually chart the market. So again, everything revolves around your technical analysis abilities, then your ability to leverage all that with options, and then create your own personal wealth fund where you can use covered calls and dividends or printing press technique, all those things to reduce your basis down to zero and just grow that into literally your own little hedge fund. So we're going to teach all of that in a 3-month course, and we want you to be with us. More to come. My friends, God bless you all. Thanks for being with us. We love to hear from you. cw@chartingwealth.com. Take care. All the best from the whole team here at Charting Wealth World Headquarters.